Welcome back, and joining us with his take on today's market performance is Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time this evening. Trade quite choppy today. We are seeing precious metals under pressure, the dollar stronger, and that of course weighing on the rand and weighing on the local market. What is going on? Is safe haven demand waning? And if so, what's behind it?
You know, I think market participants are just worried because we know, all of us, that these valuations have been very rich and the earnings not been too bad, but I don't think they're very supportive, you know, of this high valuations. But I think markets, as we know, are having excuses to say, listen, now there's an issue, and I think to some extent it makes sense that we're worried about this whole AI spend, and maybe market is their way of trying to put pressure on those executives that can please see some returns out of this whole thing, and probably we'll start to see reporting maybe being different going forward, because all along they've been telling us about how much they continue to spend. But what I'm skeptical about is the issue that we think the impact of AI that's going to have on traditional, sectors. It might not be that huge, and definitely, just like any other thing, we expect things to change going forward. That anyway, if you develop something new, there's some sectors that definitely will be impacted. But the question is, you know, the magnitude, of the impact. But the dollar itself making it very difficult, or expensive for holders of other currencies to be able to buy those commodities. Hence, maybe we see them falling. I mean, I think it was only palladium the last time I checked, which was flat. Everything was kind of in the red. And we've seen even before with these cheateries that have been caused by this AI spend. Unfortunately, the likes of gold and the likes of silver continue to be the main culprits, because now people think that, listen, maybe we just have to pay up whatever margin cost that might be there. Remember, this market, what was also been fueling this market is the fact that there's just been too much leverage when it comes to this market. So if things go against one or the other, you have to get money somewhere to be able to pay the likes of CNE.
Makwe, do you not think that this recent AI threat that's hit markets, particularly where we are seeing a risk towards sectors that are unlikely to benefit from AI being a bit over-exaggerated, because we don't necessarily know what these tools are going to do, how they're going to impact those sectors, those companies?
I agree with you. It's kind of over-exaggerated, but being market participants will use any other excuse, to justify why are we taking profits, because remember, more than 80% of market participants have to do monthly and quarterly reports. So you have to justify any reasons why you are not part of the market for whatever reason. Why did you take profits? People don't want to be seen as you're just trying to generate some brokerage or management fees. So you always have to have a reason. But you are right, we don't know as yet, but we act as if this whole thing has already been factored in properly. So
let's move over to news we do know and numbers we can sift through. There's some evidence there. BHP out with earnings today, delivering double-digit earnings growth, really being fueled by upbeat copper prices as the red metal, of course, benefits from AI demand, right? Walk me through your analysis of those earnings.
Definitely. I mean, for the period, I think copper prices that have been realized, up 32%. And we know that other than AI, the issue about this copper is seen as much friendlier to our environment, is seen as the of the future, and very same reasons when it comes to iron ore, that the demand from China not doing that great, and we know iron ore gets to be used mainly for steel, and we know that steel itself gets to be used when it comes to infrastructure, production, transportation, and we have not seen a lot of that, so there's not been serious demand out of that, and people expect international iron ore prices to unfortunately continue to fall. Coal, not surprising because of soft prices when it comes to that, and also cost pressures, so it kind of makes sense.
Another company also being impacted by dynamics playing out in the iron ore market is Afrimat. Besides that update that it released today, really disappointing markets Makwe. The last time I checked, it was down over 5%. Perhaps walk us through just your take on that update and what you made of it. It does seem like the issues that has hit Afrimat is outside of its control. It really looks like the macro picture here.
Definitely look into them selling their non-core asset. That was a good move, and at least that will help them. And yes, we are right. Look into cement. Cement volumes managed to increase, but we know the losses continue to be there, all because there's no demand, all because of the macroeconomic environment. We look into the issue about iron ore, impacted by the shipment as well.
Yeah.
Unfortunately, under control. And as you rightly said, I mean, most of the structural things are definitely out of their control. But yes, we are disappointed, but that is a harsh reality.
Yeah. All right, let's move over to your stock pick. Where are you seeing value at the moment?
I think I'll go with Telkom, and the fact that that the guys are now generating almost more than 60% of their group revenue from data, and the fact that when it comes to fiber, they continue to have a robust penetration. I mean, it's sitting at almost just around 52.4%, and the guys continue to manage to increase mobile subscribers. I mean, they're sitting at almost just over, I think, 23.5 million or so.
Yeah.
So I think guys, there is a change going forward.
All right, let's leave it there. Makwe, thank you so much for your time and taking us through trade this evening. That was Makwe Masilela from Makwe Fund Managers.